Good afternoon, traders, and welcome back to an episode of Macros with Tony. We have another episode today on the cryptocurrency market. We're going to be diving deep into all things Ethereum, Bitcoin. We're going to be taking a look at a number of different correlations in the market. So the US dollar index versus Bitcoin as well. The last time we obviously caught up with Ethereum was trading around 1200, low 1100. We were anticipating a big move to the upside. That's now unfolded. So the jury is out as to whether, Ethereum and cryptocurrencies are starting a new bullish trend to the upside, or whether this is just a bear market rally. So if you stay tuned today, we're going to be diving into Ethereum, Bitcoin, the US dollar as well, which is impacting the cryptocurrency market, and also the fundamental news events, which are going to be driving the market over the next couple of weeks. So firstly, we're going to be coming back to Ethereum. We're going to start on the US dollar index, so the DXY. The reason I want to kind of bring this to your attention is because, a number of investors who are fairly new to the cryptocurrency market may not be aware that the dollar index and Bitcoin have a very strong inverse correlation. So when the US dollar index is going up, Bitcoin will tend to move into a bear market. Now, in 2022, we've seen one of the steepest rallies on the DXY in history, really, as the Fed has been raising interest rates very aggressively and unwinding their balance sheet. Now, Bitcoin was one of the main beneficiaries of all the stimulus and money printing from governments around the world and central banks around the world. So it's only, it only makes sense that Bitcoin and cryptocurrencies would become one of the main casualties when they unwind all of that easy money. Now, if we go and take a look at the correlation of the DXY against Bitcoin, what you will find is during a dollar index bull market, so this is a chart of the dollar index, I have plotted the price of Bitcoin against the DXY. So every dollar index bull market coincides with a Bitcoin bear market. Okay, so here we go. From April 2014, the dollar index rallied from 80 all the way into 100. The Bitcoin market top was at the bottom of the bear market for the DXY. The Bitcoin market bottom was $170, and that was near the topping formation of the dollar index. What happened next? The dollar index obviously consolidated for a while before entering a bear market. During that bear market, Bitcoin rallied to a market top of 20,700 US. We then had a reversal on the US dollar index. So the dollar index entered a bull market. It was a risk-off environment. Money was flowing into the US dollar, the safe haven, the global safe haven. That continued to rally higher. Bitcoin entered a bear market, bottomed out around 3,600. We then obviously had COVID and all of the stimulus checks that came out throughout the COVID crisis. So central banks were printing money. Stimulus was provided to citizens, and that indirectly flowed into risk assets like cryptocurrencies and the stock market. So Bitcoin bottomed out around 3,600, began moving to the upside, topped out around 65,000. And that was also when the dollar index reversed course. So what happened in kind of mid-21, moving into 2022, there was rumors of central banks winding back on the stimulus and raising interest rates because inflation was getting out of hand. So we've seen this major bull market on the dollar index. The dollar index is now trading at the top of this rising channel structure. Bitcoin and cryptos have had an initial turn to the upside from these lows as the dollar index has moved lower. So I guess the jury is out as whether this is another cryptocurrency market bottom, or whether the dollar index is going to face another turn to the upside. Now, what I want to kind of go through right now with you is this recent structure on the DXY and how we're looking to really kind of trade this and what we're expecting to unfold over the next couple of days. Now, if we take a look at Elliott wave theory, what we can kind of count is this appears to just be a corrective decline on the DXY. So if that is the case, the DXY may still yet to face one more push to the upside. We have the Federal Reserve expected to raise interest rates by 0.75%, another one in December. However, bets are now growing that the Fed may need to ease off the aggressive interest rate hikes later in 2023. So you're going to start to see the early signs of a Fed pivot. They're not going to pivot at this meeting. They may reduce the size, which would be a huge surprise for the market. If they do that, then the dollar index is going to come off these highs even further. But the market is pretty much baked in a 0.75% rate hike. The Fed has stood firm that they're going to keep raising interest rates to fight inflation. So the jury's out as to whether this is a major market cycle top or whether this is just an ABC correction, because we can count a 5 decline in here. 1, 2, 3, fourth wave triangle down for a 5, possibly a wave A, an A, B, C for a wave B, and then possibly a 1, 2, 3, 4 in here. And we're now looking for a final push down for a wave C into the FOMC meeting later in the week, sort of midweek. And then once this does obviously bottom out, we may begin starting to move to the upside. So at the moment, this does appear to be an ABC correction going down. So we don't want to get too excited just yet, but this could quite easily turn into a bearish trend or a sort of a bearish Elliott wave count. So this could be a 1, 2, 1, 2, and then down, okay, for a 3, 4, 5. So, but at the moment, a 3-wave structure until we get this kind of 1, 2, 1, 2, and then down for a 3, 4, 5. So that can still happen. Okay, it's just we need to give the price action some time to unfold. So if we're going back to the Bitcoin's correlation to the dollar index, if the dollar index does come down into these lows and starts to move higher into a new bull market, then we can expect cryptocurrencies to also turn down as well. And I'm not saying that is going to happen, but it is a possibility. So we want to keep that in mind. Now let's jump into Ethereum and take a look at what's happening here. So we have had a very strong bullish weekly candle close from last week. We had a number of, a doji candle, an inverted hammer, a doji candle as well. So that was quite clearly a long consolidation phase. Very bullish. We did, unfortunately, with our trading floor members, we were just stopped out on a long trade. This wick in here killed us on the long side of the trade, unfortunately. But there'll be more opportunities in the future. So we've been tracking this kind of formation on Ethereum, which is possibly a wave 1 to the upside or a wave A, an A, B, C down for a wave 2, or a wave B, and that would then expect another 1, 2, 3, 4, 5 up for a wave 3 or C up in here. Okay, so this is still valid. We've been tracking this for a number of months, since June, since it kind of bottomed out around here. We traded it down through here. We were just stopped out by this wick in here, unfortunately, but we'll be looking to get back in on the next pullback through here. Now, we're going to, I'm fairly happy with this count through here. This doesn't look too pretty because the wave 4 is a lot larger than the wave 2 up in here, which doesn't really look that pretty, but it fits, and we can kind of stick with it until we're proven otherwise. So we're assuming wave 2 or wave B, the low is now in for Ethereum. So if this wave count is correct, this high should be taken out, okay? And we should be moving into that kind of 2,500 to 3,000 range on Ethereum over the next couple of weeks. Now, if we take a look at the recent price action on the hourly time frame, there's 5 waves through here. I'm happy with that. So that's a wave 1, A, B, C for wave 2. Probably a 1, 2, 3, 4, 5 for a wave 3, A, B, C down, and then 5 through here. So really, we've had our first initial move to the upside of a 1, 2, 3, 4, and a 5. So that is possibly wave 1 on the larger degree. Wave leave those out of the way. So what we really kind of want to see now is a ABC correction through here, an ABC down for a wave 2, and then we can start looking for the next long trade opportunity on Ethereum. So either, I just want to kind of highlight as well, either this is completed in here, or there is a chance that we might be able to move wave 3 in here and move it along 1 degree as well. So that could be wave 3, wave 4, and wave 5 coming up in here as well. But either way, there should still be a large correction or a large pullback through here, A, B, C down for wave 2, and then we can start to look to go long. So there's going to be another opportunity in here. Don't think you've missed this initial move to the upside. There will be another opportunity coming soon on Ethereum. It's just a case of waiting and being patient for that next setup. So, you know, a bit of a kick in the teeth that was stopped out on this wick down, big liquidity sweep on Ethereum across cryptos and the stock market as well. But there's going to be another opportunity to get into the market. So don't be too disheartened if you were stopped out. Now, this is the kind of the bullish count for Ethereum. So we also want to keep an eye on what the bearish count of Ethereum is as well. Because if the dollar index has got an ABC correction and it's heading higher, then Ethereum could quite easily also turn lower to the downside. So the only other kind of count that I can see is a 1, 2, 3, 4, and a 5 down, and this is an A, B, C correction up. It's a pretty steep kind of rally for a C wave correction. So my preferred count and my primary scenario is a move into that kind of 2,600, 3,000 range. But we do want to be aware that it could quite easily start coming down again from there as well, depending on what the DXY does. So it's all dependent on the FOMC minutes, the non-farm payroll this week as well, and how investors are looking to trade the US dollar index. So, you know, we don't want to be too aggressive just yet. We want to see a continuation down, but just be aware that this does appear to be a corrective sideways correction on the dollar index until proven otherwise. So just to clarify here, Ethereum, very happy, 5-wave structure up, ABC down, initial 5-wave structure up through here, waiting for the next corrective pullback to start going long in the market. So that's Elliott wave on Ethereum. Now let's move on to Bitcoin. So this is Bitcoin's price cycle and the history of how it's performed since inception. So, you know, you've probably seen a similar chart to this plastered all over the internet. We have a major Bitcoin market rally. We then have a steep correction during a bear market, 93% in the first correction, 86% in the second correction, 83% in the third correction. We've had roughly a 73% decline so far. So Bitcoin has fallen maybe 10% shy of the average Bitcoin bear market. Generally, it declines by 86%. Now, if we take some of these stats from the bull and bear markets that Bitcoin has traded in previously, so we've had from the bottom of the bear market, we've had a 364-day distance into the halving event. The second one was 329 days, and the third one was 511 days. Now, if we take the average of the Bitcoin market bottom into the halving event, on average, it takes roughly 400 days for Bitcoin to find a market bottom, leading into the next halving event. Now, the next Bitcoin halving event is estimated to be in March 2024, end of Feb, early March 2024. So if we use the average parameters of the Bitcoin bull and bear markets, that would indicate that February 2023, January to Feb 2023 is when the average Bitcoin market bottom should take place. So this would actually, this kind of analysis would actually indicate that Bitcoin still has a little bit further to go to the downside before bottoming out and then beginning to run higher into the halving event and then moving higher from there. So the halving events are bullish because the rewards that miners receive are halved. So simply put, the supply is halved going into the market, which is very bullish just on simple supply and demand. So we have this negative trendline resistance coming down that hasn't been taken out. That's been a bullish signal previously as well on every single Bitcoin market bottom. So we don't want to get too excited just yet. And again, just going back to the US dollar index, this appears to be a corrective decline. If the dollar index does continue to push higher, that's also going to filter through into Bitcoin and put some downside pressure on BTC. So, if we do see that kind of 86% decline, which does generally occur in a Bitcoin bear market bottom, that could take Bitcoin down into that kind of 10, 12, 13K area, which would be obviously of significant interest to all of us as investors. If we get anywhere down here, you can kind of bank on the whole market looking to buy around that area. So on one hand, the analysis would suggest we still have a bit further to go to the downside. But on the other hand, we have structures on Ethereum which are starting to turn very bullish. This could still quite easily be an A, B, C correction. So we could get an A, B, C up, and then we start to roll down from there, which would play into a higher dollar scenario. So, if it's only a 3-wave rally, we could still see price action moving further to the downside. But, short-term traders, there's still opportunity to be made on Ethereum and BTC. Just wanted to bring this to your attention that we don't want to get too excited just yet. There's still some room to move to the downside. Okay, a very quick overview of the market. Hopefully you've learned something new on Elliott wave, on the dollar index and its correlation to BTC, the Bitcoin price action as well. If there's any charts you want us to cover in the next webinar, whether it's cryptos, stocks, CFDs, or foreign exchange as well, please leave a comment below. If not, I'll catch you all in the trading floor very soon.